We're now moving on to Unit 3, which is the second part of our study of website development costs. In this unit, we cover two key issues: the accounting for startup costs under Section 195 and the Section 41 Research and Experimentation Tax Credit. When a company is being started, it is subject to the rules of Section 195, under which startup costs must be capitalized and amortized over a period of 15 years. To apply the provisions of this section, we need to know three things. When does the startup period end? When does it begin? And what costs are subject to Section 195? As we will see, a new business that is not an expansion of an existing business is subject to Section 195 until such time as the business begins to function as a going concern and perform those activities for which it was organized. Determining whether the development of a website is subject to Section 195 can be difficult and can involve such analyses as, for example, whether the website will sell products and services to a new customer base or to existing customers. Determining when the startup period ends is usually easier. In the case of an online business, the startup period ordinarily ends when a website is open to the public and is performing the majority of its intended functions. As we will see, when a business is subject to Section 195, the types of costs that must be deferred are primarily those costs that would otherwise be deductible under Section 162 by an active business. This means that certain costs, such as those deducted under Section 174, are not capitalized under Section 195, even though the business is in a startup period. This is because Section 174 permits deductions by business that has not yet begun operations. In Unit 3, we also cover the Research and Experimentation Tax Credit as it applies to website development costs. First, we study the basic calculations for both the regular and alternative research and experiment tax credit. Then, we examine the basic rules for identifying website development activities that constitute research and development activities qualifying for the credit. Third, we will examine the special rules for the internal use software and the manner in which those rules apply to website software. Fourth, we identify the types of costs, such as wages and other direct costs, that qualify for the credit. Finally, we examine the kinds of documentation that a website developer must have to support a credit in the face of a challenge by the IRS. Begin your study of this unit by watching and listening to the two PowerPoint lectures, which you will find under the tab titled Unit 3 Lectures.